All right, welcome everybody to Valuation Masterclass Bootcamp final presentations. Tonight presentation is going to be on LVMH. Yesterday's was on Hermes. And I'm really excited for this one. You know, Hermes is in some ways is a very different company from LVMH, yet they're in the same sector. And so I'm interested to learn more. I just want to welcome everybody on the call and on the video and just highlight that feel free to announce yourself, say hi if you're on the call. And there's Hillary. Good to see you. You know, Hillary, I was just recently thinking that we need to do a video call. I want to catch up with you. For those people that don't know Hillary, he is the man on LinkedIn who connects people. But welcome everybody, and Moments there and all others. And feel free to ask questions. And ultimately, the objective here is to try to provide good information about the company LVMH. Of course, remember, this is a student presentation, so you shouldn't take it as a recommendation, but you can take it as excellent work and research to try to help us to better understand the company. Also, just to highlight that all the students in the Valuation Masterclass Bootcamp attend for 6 weeks, and they start at 0, and then they end up in this great report. So let's cheer them on, and hopefully you've got questions. Feel free to ask those questions, but I think it is time to kick off the show. So let me introduce, hold on, I'm getting there we go. There's Dell, and Dell, good to see you. How are you?
Yeah, I'm good. Nice to see you.
Are you ready for tonight?
Yeah, I'm ready for tonight.
You feel a little nervous or you feel confident?
Both?
Yeah. As I look at this video here, it reminds me of when we first met, talking by video when we did our first video call, and how far you've come since then. So I'm really looking forward to you sharing what you've learned and helping us understand more about LVMH. So are you ready to go?
Yeah, I'm ready.
Audience, are you ready? You're going to have questions. We're looking forward to all those questions. Feel free to type your questions in the chat. Hopefully, you can type them in wherever you are on Facebook, on YouTube, on LinkedIn. You're welcome to type them in the chat. So let me first share the screen, and I'm going to take myself out of this screen in just a minute. But Del, as soon as you're ready, what you just want to do is you just want to start off, introduce yourself, and then
Mm-hmm.
take it away. And I'm going to come out of the screen and out of the sound, so don't worry about me. Also, you can also click on hide. I think you can see the hide there for that that thing at the bottom. You see that? It says stop sharing, and to the right of it should say
Yeah,
hide.
yeah.
So you can click on that to close that bar. Hopefully that just closes that bar.
Okay.
Yep. Okay. And I think you're ready to go. So as soon as you're ready, kick it off.
Yeah, let me introduce myself first. My name is Del. I'm a senior student at Chulalongkorn University, major in finance, and I'm going to graduate in the May. And I'm going to be a financial analyst at Kasikorn. So I will present you LVMH. LVMH is the leading company in luxury goods. The company has shown a strong revenue growth over the past 5 years. However, the party is over and it's time to move on. I issue a sell recommendations on LVMH with a target price of 744 euro, representing a 10% downside based on the discount cash flow FCFF, using a WACC of 9% and a terminal gold rate of 2%. Despite LVMH is a very good company, I anticipate the challenges ahead of the company. Firstly, the excessively high prices of fashion and leather goods leads to lower demand. Secondly, the rely on store expansions would lead to a higher capex. Lastly, profit margins are anticipated to be squeezed by worse product mixes and higher costs. Additionally, the company would face a short-term risk, which is the slower than expected recovery from Chinese consumers, and the long-term risk, which is the change in consumer preference. LVMH has acquired ownership of 75 well-known brands including Christian Dior, Tiffany, and Celine. With its strong brand, LVMH has become the world's leading luxury company with 27% share of the market. But it's a challenging time for the luxury giants. Fashions and leather goods has experienced revenue growth at 16% CAGR from 2019 to 2023, along with a 25% increase in price over the same period. Consequently, with an increase in supply of goods from the lower sale and a high price increase, demand may shift toward the second-hand market, where prices likely to be lower. This is supported by the second-hand market grew by 65% between 2017 and 2021 compared to 12% growth from the first-hand market. Therefore, I estimate that with the normalization effects and the demand shift toward the second-hand markets, LVMH's revenue growth from 2024 to 2026 would be at 6.5% CAGR. Next, LVMH has struggled to capitalize on e-commerce trends, making it only 11% of online sales in 2022. This is primarily because online sales are not well suited for ultra-luxury brands like LVMH, as customers typically seek the exclusive experience offered by offline sales. Therefore, the company has continued to invest in store expansions at a 6% CAGR over the last 10 years, and I anticipate this trend will continue. So I expect capital expenditure to increase at a 5% CAGR from 2024 to 2028. Lastly, LVMH margins would face a decline due to a lesser proportion of sales from the fashion and leather goods, which contribute the highest operating margins at 40% compared to the company operating margins of 27%. As the store expansions would also lead to a higher employee and lease expenses. Therefore, I estimate that the EBIT margins for LVMH would decrease by 90 bps from 2023 to 2024, putting it 40 bps below the consensus. Now let's look at the industry analysis. The luxury goods is a strong industry with multiple bright aspects. The first one is the leading player with the lowest customers loyalty dominates the luxury goods markets. This can be seen from the top right chart that the top 10 companies acquire more than 50% of sales, but further than that, they can acquire 75% of net profits. Thanks to the strong customer loyalty, it also creates a significant barrier to entry for the industries. Next, the lowest growth in China is expected to provide a significant boost to the luxury industries. With China contributes 25%, China will be the largest contributor in 2030, as China has shown a remarkable 17% CAGR from 2019 to 2023 compared to the global market at 6.5% CAGR. This is fueled by the rising middle high income classes. However, due to the near-term economic uncertainty in China, the luxury market that is projected to experience a mid-single-digit growth in 2024. Lastly, brands are trained to reduce the reliance on the wholesale channel. This will make them gain higher profit margins by eliminating wholesale markup. Now let's look at the decent performance of the companies. LVMH has experienced a slight revenue increase of 4% and a drop of net profit margins by 11%. This shows that the company has shown a sign of normalizations in two half 2023. Now let's look at the consensus estimates. over 46% of analysts hold a buy view on LVMH, with 6 analysts have issued a strong buy recommendations. Consensus also predict a decrease in revenue growth from almost 9% in 2023 to about 5% in 2024, and also expect EBIT margins to lie from 26% to 27% between 2023 and 2026. In conclusions, most analysts hold a favorable outlook on LVMH, recommending it at a buy. Now let's move on to the revenue structures. LVMH has shown revenue growth of 86 billion, with the fashion and leather goods contribute 49% of sales, led by a key brand like Louis Vuitton and Christian Dior, and the ultra-luxury goods segment, which account for 30% of sales, includes three subcategories: watches, jewelry, perfume and cosmetics, and wine and spirits. The selective retailings, which represent 21% of sales, encompass LVMH retail stores located in malls, shopping districts, and airports. And as company operate in various countries, fluctuations in currencies value can affect its revenue. Now let's look at the FVMR investing. LVMH appear a sort of active relative to the companies in the French markets, considering fundamentals, valuations, momentum, and risk. And with the profitable growth, it's consistently ranked in the top 20% to 40% among the large consumer discretionary companies globally until 2023. Thanks to the profitability that has consistently ranked in the top 20, with its strong expense control that helped the company has a strong profitability. And now let's look at the income statement. The company showed a significant revenue growth in 2021 to 2022, but show a sign of normalizations in 2023, and I expect it will continue in the 5 years. And with the balance sheets, the company has the increase in inventories and the net fixed assets. As the company grow in the recent years, it have to have more inventory and net fixed assets to grow. And if you look at the goodwill, you can see that the goodwill decreased slightly. This is because the company haven't has any major acquisitions in the last 3 years. And the liability and equity show that the company has more debt due to the company want to support for the store expansions. And with the cash flow statement, you can see that the company invests in the capital expenditures and inventories, but the company also can maintain the high cash for the company over the last 3 years. And I also expect that it can obtain the cash at around 10,000 euro in each year. And the next one is the ratio. The first one is the cash conversion cycle. You can see that it's increased a little bit. This comes from the inventory conversions periods that increased in the past. This is mainly due to the normalization effect from the company in 2023. And with the gross profit margins, I expect that it will decrease as the company would face the worst product mixes from the lower sale of retail and fashion goods segment. And the company would also increase in expenses from store expansions. But the company has a very low financial risk. As you can see, the net debt to equity is very low at 0.5, and the company had also have very high time interest earned. And the next they show is you can see the growth from the company in the past has shown a strong growth from 40% and to 23% in 2022. But I expect the company will face a normalization period as I expect it to grow at 6.5% over the next 5 years. along with the assets and gross profit margins. And now if you look at the free cash flow data, you can see that the company has generated a stable free cash flow to firm around 20,000 euro per year. And I expect this will continue as is a very good company that can generate a free cash flow to firm close to the EBIT. Now let's move on to the relative valuations. On the price per book multiple, LVMH look expensive compared to the consumer discretionary sector in the French market. And LVMH trading at a significant premium based on price per book to ROE multiple in the forward period. And on the PE multiple, LVMH also trade at a significant premium as I expect EPS growth to be very low in 2024. This will make PE to growth ratio in 2024 for LVMH seem very expensive. Now let's move on to the valuation part. I assume a lead fee rate of 2.5% and a market equity risk premium of 7.5%. And with a capital structure around 13%, WACC of the company at 9%, I use a low terminal growth rate at 2%, and using a free cash flow to firm to value the LVMH. And in my best case scenario, I anticipate sales growth of 6.5% until 2028, leading to a 744 euro per share based on the free cash flow to firms. This represents a 10% downside of the company. And I also conduct a sensitivity analysis on the following price. And with the optimistic case, I assume a sales growth of 7% and pessimistic case at 6%. And this is the sensitivity analysis. As you can see from the valuation part in the right hand side, the sensitivity analysis shows that even the best scenario, the company also had a whole recommendation on it. Now let's move on to the list sections. The short-term list for the company is the slower than expected recovery from Chinese consumers, as the Chinese consumer spend account for around 20% of LVMH sales in 2023. However, the challenges persist in China economy due to the issue in the property market and deflationary pressures, which are expected to continue into 2024. And the long-term list for the company is the consumer preference, as is the key attribute of these industries. It's possible that in the future there would be a shift in consumer preference. Therefore, I issue a sell recommendations on the LVMH despite the past that the company has shown a strong growth, but the company market price has already reflected in that. But the market overlook the challenges ahead of the LVMH. So the party is over. It's time to move on, and it's time to sell LVMH. Thank you.
All right, excellent. Why don't you go to the free cash flow page first? Let's kick off right there. We got some questions coming in, and for anybody that's watching, feel free to ask any questions. There you go. So I just want to understand, the CapEx level that you're expecting is relatively, I would say it's not out of control, but there's a relatively high level of CapEx, 8,528 this year, and then up to 10,326. How likely do you think it is that they're going to have CapEx at that level? Like, feel like you're conservative? You feel like you're aggressive in your CapEx forecasts?
In my opinion, it would be higher than the market's expectations, as I think the company would invest in the palm areas, which I think it will increase in the futures. So the company also have to invest in that, and they also need to enhance the consumer's experience. So that's why I think the CapEx would be higher than 2023, and I think this is not aggressive consumption, is a conservative assumption.
Okay, why don't you go to the consensus page that you presented, and Moment has a question for you there. So hold on. Okay, let's see what Moment says. He said, you went totally against consensus. So I want to ask about what you think is the main thing that you know about LVMH that other analysts don't know or aren't thinking about. And, any thoughts on what could be a catalyst to have the share price behave the way you think it's going to behave versus the others?
Yeah, for me, I think it's about the demand that would shift toward the second-hand markets that I think it would be intensively higher than the markets expect. That's why my recommendation is different from the consensus.
And you presented a little bit of the information that you saw related to that, but could you review that? Maybe you can go to your story page or just tell us a little bit more about your thought on how that's going to happen.
Yeah, because the price has grown a lot and they also sell a lot of product in the recent years, and this is create a lot of supply good that have in the market. And I think they grow too much in the past, and it will make the growth in the futures affected. With people, they cannot buy the luxury good at the same price, so they will seek some alternative staying with is the second hand market.
Okay. Can you go to the ratio page where we show the revenue growth? Okay. So your revenue growth that you're forecasting is 7%. Let's go to the question from Bill, who says, do you think LVMH has enough pricing power to raise prices to offset rising costs of leather?
Yes, I think they have a pricing power for sure, because in the luxury market, the price is something that the company use as a strategy to create a desirable for the product.
Mm. And let's look at the prior page and let's look at the margin, the gross margin, and maybe let's see what your assumptions are there. Or sorry, the next one. Okay. So you're assuming kind of a stable gross margin over the next 3 years, a little bit of a fall, but not like it's collapsing.
Mm-hmm.
So that's some indication, I guess, that they can handle, a sharp rise in leather price. All right. We've got a question from Alan. Alan says, what's the biggest risk that your valuation is overly pessimistic? What one major factor would force you to reconsider your revenue normalization thesis?
The list that I would think is will affect the normalization effect would be the higher growth from the past, and also the uncertainty in Chinese economy, which is the main contributor for the LVMH and ultra luxury good.
Okay. And a question from Superwan says, you said the company's expanding its stores. Do you think they can capture profits from this? And would this affect your recommendation?
Yeah, the company's strategy to expand store is a good start is a good strategy, because it can diversify into the other business. For example, they have a Sephora, the retailer that sell the makeup product, so they can have a revenue from that segment. But as the retailer, it will create a very low margins compared to they sell their own product.
And I see a question from Pornrat. What are the factors or information that you think the sales from the expanding stores couldn't offset the cost of store expansion?
Um, yeah, in store expansions, it would create a revenue from the companies, and but it will pose a list for the company in the futures that if it will make the company more sensitive to the economics because they have a fixed cost or something like that.
Mm. I want to go back to the question from Alan, and let's go to your valuation page talking about your biggest risk that your valuation is overly pessimistic. And clearly, one of the risks is that your discount rate is too high. So, for instance, we saw yesterday the presentation on Hermes, and we saw a very low discount rate compared to this.
Mhm.
How do you feel about your discount rate, and is there a risk that you're overly pessimistic?
Um, in my discourage, I think is reasonable because I in the market returns, I it's come from the past of the French market that have allowed 10% over 10 years, and I expect this will continue. And in the cost of debt, I think is a reasonable cost of debt in the long term.
Okay. And another question was, what factors could change your recommendation from sell to buy? I mean, you're not very far away with
Yeah.
only a 10% downside. So let's just imagine that either something goes right or the share price falls, or what is it that would make you say, okay, I'm ready to buy now?
Yeah, it would be a Chinese economy that would be a turnaround factor for the LVMH because China has not performed well in the past. But if they have a strong recovery, for example, they have a set GDP target at 5%. So if China economy can achieve more than that, it would be a factor for recommendations changing from sell to buy.
Okay. Wow. A lot of good questions there. Let me ask you, how does it feel to graduate from the Valuation Masterclass Bootcamp?
Yeah, it feels amazing. I feel like I learn a lot from this course and from a lot of people here.
And how would you describe your transformation? Think about, go back to day one and where you were at in your knowledge. I mean, you're studying and have it fresh in your mind. What transformation did you go through in the boot camp?
Yeah, you say a lot about valuations mastercard is transformations, not informations. I think is the key for equity analysts that you have to make informations around you to make it more valuable and present it to people. I think I can learn from that, like the framework and the process of thinking to do that. And I think this would make me more competent in this field.
Yeah, maybe you can tell the story about how you got a job offer at the end of the boot camp. It wasn't necessarily related to the boot camp, but it was exciting to share that news. Maybe just share, what you've got and, what your plans are.
Yeah, I just got a job offer from Gasikon Security, and it as a equity analyst. And I think it's my plans that I want to be someone very good and someone who can say that I am the number one analyst in that field in the futures.
Mm. And my last question is, why don't you share how you found out about the Valuation Masterclass boot camp, and then why did you decide to do it?
Yeah, I first saw you, Andrew, when I participated in Save a Research Challenge, and I saw your video about how to live equity research that win Save a Research Challenge. And so that I think that inspired me. Like you have a very good system, very good thought process to analyze the things, and you're ready to teach people to gain more, more uh, more informations about this and more comfortable to doing evaluations. And I decided to join your internships because I think I can improve myself in these fields and prepare myself before I go to the professional career.
And you're on your way. So congratulations, and congratulations for graduating from the boot camp and for going through the process of presenting your final presentation. You got a lot of tough questions and you had good answers. So congratulations to that. If you just hold on for a second, I'm going to come back and talk to you for a minute, but just hang on. Say goodbye to all the fans out there, and then I'm going to take you off the screen.
Yeah, thank you very much, everyone.
Okay, hold on. Well, that was amazing. I think that was a great presentation, and also great responses to the questions. So just remember, in the Valuation Masterclass Bootcamp, most of the students come in and they're at the beginning stage, at really ground zero, in writing a complete and full report. And you just saw an example of that. If you want to learn more about Valuation Masterclass Bootcamp, just go to valuationmasterclass.com and it's all there. I want to thank everybody for attending and also for the awesome questions that you have. And of course, thank Del for his effort to be one of the presenting students. Let's have a great evening and a great day tomorrow.